Hello everybody, I'm Robert Tusardi, the creator of Blockchain Kingdoms. We turn video gaming into passive income and paid work, so we just experienced another crypto crash. Now in this video I am going to analyze the markets with a little bit of help with the YouTube personality Meet Kevin.
Hey everyone, Meet Kevin here.
Who just interviewed Harry Dent. Harry Dent, Harvey Dent, like this guy won the lottery when it comes to names, right?
Harvey, what happened?
From what I can tell, he is someone who has had quite a bit of infamy when it comes to predicting the stock market. Apparently, he is always predicting market crashes.
And that's why I'm predicting this 50% crash.
It's kind of what he's known for, and what he's been talking about in terms of economics seems to make quite a bit of sense to me. So he's a little extreme, and you know, I think he's maybe a little bit...
I am telling you...
crazy. I mean, I think a lot of what he has to say is pretty valid, and especially when it comes to overstimulating the economy and the price it has to pay. And he also talks about recessions being a good thing in order to help us flush out debt and get rid of the companies that are not producing value. So I think this is a really interesting conversation. And you know, I am not a financial advisor. This is not financial advice. So do your own research and make your own decisions. But let's go into this first bit here and see what Harry Dent had to say to Meet Kevin.
They're creating an avalanche by overstimulating that's just going to take one snowflake, one damn thing, bam. Wow. And it's going to happen so fast. And that's why I'm predicting this 50% crash. These people in control of our economy have no sense of economic and human reality. And they're just thinking, well, when things go down, we stimulate more. And we don't want to have a recession because that's bad. Recessions are the best thing that ever happens to an economy because it cleans out a lot of bad investment and bad companies and imbalances overnight and allows you to grow again.
So what he's been saying here makes sense to me, that there's been a lot of stimulus over the last decade, and this recent batch has been quite a bit a lot. And he's saying that if we just had a recession, we took some pain, and we didn't keep trying to overstimulate or just stimulate the economy, well, then we would actually reach a kind of equilibrium and get back to a healthy, thriving economy. But let's see what else he had to say.
Recessions are necessary for growth. Any economist and all of these Fed people think the same way. Oh, no, we should never. Our job is not to have recessions. Recessions are bad. If you think recessions are bad, news for you, central banks, you know nothing, zero about the dynamics of our economy and how it grows. Without recessions throughout history and occasional depressions to get rid of big debt overhangs like this, we would never have an honest business or growing economy ever again.
Saying that there are a lot of companies out there that have been saying that are not really producing value for us, and that kind of makes sense to me. If there's a company that's going to die because it's not working hard enough, or it's just not doing well, or it's not the right timing for that company, and it keeps getting saved by the government and bailed out, well then that just perpetuates it basically being dead weight in the economy. So I think that's really super interesting.
This one, I think it's been pushed a little past the cycles. The cycles would have naturally peaked last year, late 2019, early 2020, just when COVID set in. But when COVID set in, it gave them an excuse to just blow up stimulus, now fiscal, which is more powerful, by the way. High financial asset prices equal unproductive investment. People are speculating in stocks, in real estate, and things that are not growing the economy, just going up because they're going up. And when they collapse, all that money disappears twice as fast as it was created. Twice as fast. That's another historical fact. Bubbles go down twice as fast as they go up.
It's now really starting to get into the meat of this. He says that there's no way out of it. So that's super interesting because obviously we're going to have to get through this some way. And he's also been saying that the way that people have been using some of the stimulus money is to invest in the stock markets, and that the debt that's being created by companies right now is bad debt. And I guess he essentially means a debt that they won't be able to pay off. So then they're probably just going to require more stimulus to keep lagging around when maybe they should just die out. So this is actually kind of very similar to a lot of the people that Meet Kevin talks to. I know this guy seems a little eccentric. A guy, Harry Dent, seems a little eccentric. But I'm really starting to see a theme in a lot of the people who he interviews, and they kind of do have the same story that things have been overstimulated. People are investing a lot of money now into equities, and they're seeing that as like gambling. And the other thing is that my personal take on this is that economy is kind of like a rubber band, and you do have commodities and things like that with inflation. Inflation is going up, as we've seen a lot of other people say it is, and if you go out, you really have to look for yourself. Like, is the price of food going up? Is the price of what you want going up? Is the price of gas going up? And if all these goods out in the real world are going up, well, then you also have you also have kind of a rubber banding from the equities and the crypto. There's only so much money inside of the pool, so what's going to happen is that it's going to have to move around. It's going to have to move around from from banks to either commodities or to cryptos or to equities. And if the price of commodities are going up, what's going to happen is the rubber band is then going to suck money out of the cryptos, and it's going to suck money out of the equities because people have been getting all this money to invest, and it's going to get sucked back into the bank accounts or commodities, more in this real space to be used. And the flushing out of debt, well, I think that's a little bigger conversation that I probably not to talk about right now. But if you're starting to see it the way I see it, is that I'm starting to look for this rubber band effect. And to be honest with you, I'm still a little uncertain about the whole inflation thing. I mean, I'm not really sure if I'm seeing the price of food and things like that going up. I mean, maybe the price of gas is going up a bit, but I think that's also probably the scary thing about inflation, is that a little bit of inflation, especially on a global scale, or what I'm saying is across everything, could be potentially bad. If you're paying 10 to 15% more for just about everything, that could get awful really quick. So I think one of the real questions we have to ask ourselves is, how much inflation is there really going to be? Because the more inflation there is, I think the more fear, uncertainty, and doubt we're going to see inside of the crypto and equity markets, and the more it's going to get flushed out. Are we going to see another 50% crash from where we are right now? I don't know. But let's see what else Harry Dent has to say on these topics.
I think Bitcoin, if it survives as the standard, which is what it appears to be to me, the standard, the gold standard, when it gets up to $500,000 to $1 million a coin and is worth as much or more than all the gold in the world, it becomes the gold standard for a digital, global, not national government systems. Governments cheat. Governments print money to cheat. Governments push down their currencies to cheat and trade. All governments do is stimulate and cheat. This global currency will not allow that and will punish governments for doing that. So Bitcoin, if it becomes that, it could go to 500,000. Kathy Wood's projections are 500,000. I say 500,000 to 1 million if it does survive this crash and becomes that standard. Ethereum is probably the most likely of all to survive, because it's a platform for launching blockchain applications and do for financial assets what the internet did for information.
Think about Bitcoin and Ethereum. I mean, heck yeah, I think these things are here to stay. And while the value of them in the short term may drop and get rubber banded back into commodities and equities for a period of time, there might be a bear market while everyone tries to figure out what the value of everything is going to be. But in the long term, there's only so many of these currencies, and Bitcoin will be reduced, and Ethereum will be the blockchain application. And but I think there are also going to be other ones like ADA, Matic. As we started seeing, Ethereum only has so much capacity. It started to get really congested, and as the speculation got really high with Ethereum, well, then that really started to flush, all of the dollars out, and it's been a lot cheaper for me to actually use Ethereum over the last week. There were some points where transactions that used to cost, close to like $50 to even $100 to make on that network were suddenly like $8. And once it even asked me if I wanted to make a $6 and a $1 transaction. The $1 transaction never finished. But those were the fees, and so we could see that there was a lot of speculation here on Ethereum. There's a lot of speculation going on around use case cryptos. Are we going to get back to those levels? I think it's pretty possible. I think maybe near the end of this year or maybe beyond, we will definitely see like $100,000 Bitcoin or something like that. I still think it's a possibility, but you know, Harry Dent might be right. Like we might actually have quite a bit of a crash before then and a continued bear trend. Today, Meet Kevin posted another video just on himself about the cryptos and the crash and a possible rebound. And this is what he had to say about the market equities or volatility versus the Bitcoin volatility, and who's losing money right now. Because if you were profiting greatly, you know, are you going to sell out when you're starting to lose money rather than just when you're selling out on profits?
You know, usually our volatility index is sitting somewhere between 18 and 24 in the stock market for, you know, like the Dow. Okay, well, the volatility index for Bitcoin has been sitting at a 30-day average of 100. So that's like 4 times more volatile than the stock market, okay? But beyond that, the measure currently sits at 130. So it's even more volatile than the average we've had over the last 30 days. Now, I mean, that does create the potential for, you know, hey, well, I mean, if the volatility index is jumping this high, maybe it's time to buy the dip. Maybe. But know that at least with Bitcoin, you've got 75% of people who are actually losing their real money now rather than just their paper profits. And when people lose this is a good bottom line to remember, right? When people lose their paper profits, no big deal, diamond hands. When people start losing their real money, the concept of diamond handing doesn't seem to apply anymore. You know, the fear takes over, and the preservation of what they have takes over. Oh, whatever. This is when the true paper handers come out and the true diamond handers come out. Right?
So that's going to be the end of this video. There have been like sirens and helicopters outside for like the last 20 minutes while I've been trying to make this video. I don't know what's going on. But anyways, what I'm going to be doing in the market is I am actually selling some of my cryptos, and you know, we'll see about equities tomorrow. So I think potentially, you know, the tech stocks that I have tomorrow are probably going to be down quite a bit. And yeah, I mean, I don't know what's going to happen. You know, so these are just some of my thoughts, and I don't want to be the guy to like put the fear into people, but I think we have to be realistic about what's happening in the economy, which is why I'm saying you have to use your own best judgment. Are you like really seeing inflation out there? I think if you are, well, you know, that might be a signal for the way the economy is going, for money being moved back into bank accounts and commodities rather than stocks and equities. So thank you so much for joining me in this video. Like and subscribe, and I will see you in the next one.